Something isn't adding up. As Bitcoin quietly slips, XRP edges toward a legal cliffhanger, and one analyst claims this is the final millionaire wave. Meanwhile, XLM stirs from the shadows, XDC explodes 11%, and whispers of an HBAR ETF are rattling the charts. Is this just noise or the calm before an orchestrated crypto storm? Something big is brewing behind the scenes, and this time, it's not just about price action. XRP is entering the final stages of a legal chess match that's lasted over 3 years, and the next few days could define its future. At the center of it all, a ticking legal deadline that's gone mostly unnoticed until now. The U.S. Securities and Exchange Commission has until August 15 to file an appeal against Judge Annalisa Torres' ruling that XRP is not a security when sold to the public on exchanges. But here's where it gets intense. If the SEC moves forward with the appeal, it could extend regulatory uncertainty and spark a chilling effect on XRP's upward momentum. But if they don't, legal clarity could become XRP's most powerful catalyst to date. According to multiple analysts and legal experts, a non-appeal would essentially lock in XRP's partial victory, giving institutional players the confidence they've been waiting for to re-enter the market. We're talking hedge funds, fintech platforms, and even crypto-native firms with trillions in liquidity waiting on the sidelines. Meanwhile, the broader market is starting to feel the pressure. Bitcoin slid over 2% this week as fresh U.S. labor data missed expectations, stoking fears of a stagflationary environment, sluggish growth, sticky inflation, and high interest rates. This triggered a wave of ETF outflows, weakening BTC's short-term setup. But here's the twist. While Bitcoin falters, XRP is now on the brink of becoming the only large-cap token with legal clarity in the US, and that's a game changer. Some analysts are calling this a narrative pivot point. With Ethereum facing its own set of regulatory gray zones and Bitcoin trapped in macro headwinds, XRP could become the market's next institutional safe haven, especially if the court silence continues past mid-August. There's a phrase making the rounds among crypto veterans right now. This is the final wave. Miss it and you miss the moon. That's according to a top analyst who believes XRP is entering the last leg of its macro Elliott wave cycle, the explosive wave 5 that often delivers parabolic gains before a multi-year cooldown. This isn't hopium. It's based on chart structure dating back to 2017, and more importantly, how XRP reacts during periods of extreme regulatory resolution. Let's break it down. Wave 1 and 2, the 2017-2018 bull run and the crash. Wave 3, the multi-year consolidation with short rallies in 2021 and late 2023. Wave 4, the legal drag and sideways movement post-SEC lawsuit. Wave 5, that's what analysts say we're stepping into right now, and it could be the most explosive yet. Why does this matter? Historically, wave 5s are where outsized wealth is made, not just because of price, but because of timing. You're buying before the masses, before ETFs, before the next bull cycle hits mainstream media. And the setup couldn't be more aligned. Legal clarity incoming, XRP dominance climbing quietly, smart money accumulation visible on-chain, a wave of tokenization hype from BlackRock, Citi, and Swift, many of whom have ties to RippleNet infrastructure econ. One analyst even projected a potential $5 to $7 price zone for XRP within this wave, depending on volume confirmation and whether BTC reclaims 70 cal in Q4. Most people miss the final wave because it doesn't scream obvious. It just starts moving, quietly, then violently, the analyst warned. So here's the million-dollar question. Are you positioned or are you watching? Because once wave 5 kicks in, the entry window slams shut fast. We're talking days, not weeks. After weeks of building bullish structure, XRP is now testing the $0.74 resistance zone, a level it's struggled to break since March. Why does it matter? Because this level aligns with the 2021 breakdown structure, major volume node resistance, and the psychological barrier before $1. If XRP clears 74 cents and confirms above $1.85, analysts say the path to $1.10 to $1.40 opens up rapidly. But here's the kicker. Failures at these zones in the past have triggered 20 to 30% retracements. So all eyes are on volume, RSI strength, and news catalysts like court rulings or ETF updates. XLM, eyes on 42s and 47 cents. Stellar's been climbing quietly, now hovering just below 39s after a wild intraday move. The two most important resistance levels here: Starter 42, the neckline of a potential inverted head and shoulders. 47, a major multi-year ceiling, last tested in late 2021. Break these, and XLM could enter price discovery towards 60 plus, fueled by renewed institutional partnerships and speculation around its role in cross-border CBDC infrastructure. Why resistance levels matter more. Now, in low-volume conditions, resistance levels aren't just technical markers. They become liquidity traps. That's where whales dump, shorts reload, and paper hands panic. But if XRP and XLM push through those zones with conviction and news, the breakout could be real and fast. The resistance is real, but so is the pressure behind it. These zones are either ceilings or launch pads, says one trader. XRP, watch 74, 85, 110. XLM, breakout levels are 42s, ends, and 47. Above those equals breakout rally, below equals potential chop or dump. Volume and news, key catalysts. Stellar had one of its most volatile 24-hour periods in recent weeks, spiking sharply to 41 cents, then pulling back just below 39 cents. But unlike typical pumps, this move wasn't entirely speculative. Here's why traders and analysts are watching XLM more closely right now. 1. Volume surge. And it wasn't just retail. Yesterday's rally came with a notable volume uptick, especially on Coinbase and Binance, over 3x the daily average. This wasn't your average retail pump. On-chain trackers show wallets linked institutional activity accumulating, particularly in the $36 to $39 range. Could this be front-running a CBDC announcement or new Stellar-based partnership? 2. Quietly gaining real-world traction. While XRP grabs headlines with legal drama, Stellar has been quietly building. Partnership with MoneyGram for global remittances, integration discussions with African fintech platforms, rumors of pilot tests with central banks using Stellar's blockchain for tokenized fiat. The market may finally be pricing in Stellar's utility narrative, not just speculation. 3. Technical setup. Looks constructive. Zooming out, XLM has formed what looks like an inverted head and shoulders, a classic bottoming pattern. Left shoulder, formed near 31 cents, head bottomed out at 27 cents, right shoulder now at $36. Neckline, the 42 resistance zone known. Break above 42s with volume, and analysts are calling for a move to 50 fence within days. But failure here could drag it back to 34 to 32 quickly, especially if Bitcoin wobbles. Are bulls really back? Short answer, momentum is shifting, but confirmation isn't here yet. What bulls need? A clean break and hold above 40 cents, broader altcoin strength, a narrative spark, like a CBDC pilot announcement or a new remittance corridor activation. Until then, we're in anticipation mode with real upside potential, but also sharp downside risk if the rally fades. Amid the chaos of XRP and XLM, another altcoin is quietly stealing the spotlight, XDC network. After spending weeks in a consolidation range, XDC exploded 11% in a single daily candle, backed by strong volume and whispers of institutional interest. But the key question now is, can it sustain the rally and break through on Van Fips? 1. What triggered the move? Several catalysts seem to be converging. On-chain volume spiked 3.8x above the weekly average. KuCoin and Gate.io wallets saw significant inflows. Whales started accumulating between 10.01 and 0.109s. The XDC Foundation also dropped subtle hints on X, Twitter, about a new DeFi partnership and a possible enterprise integration announcement later this month. 2. Resistance at 1/115 and why it matters. The $1/115 mark isn't just psychological, it's also a structural resistance from the April high, the Fibonacci 0.618 retracement from the March dump, the previous failed breakout in mid-June. Breaking and holding above this level would open up their 13 to 0.14 targets short term. Rejection here could trigger a swift pullback to the 98.102 zone. 3. What's behind the growing XDC narrative? While XRP and Stellar dominate the cross-border payment conversation, XDC has carved out a niche in trade finance and tokenized documents. TradeFinex adoption is increasing, with pilots now active in India, UAE, and Singapore. Enterprise use cases are growing, especially in digitizing supply chains. A potential ISO 2022 alignment narrative is gaining traction on social media. XDC isn't trying to replace XRP. It's targeting a different but crucial part of global finance. Bull versus bear momentum. Bulls argue momentum is shifting fast, a higher low is firmly in place. Break of 1/1/5 confirms uptrend continuation. Bears caution. The rally might be short-lived hype. Daily RSI is entering overbought territory. No confirmed news from the foundation yet. While most altcoins are swinging wildly, Hedera Hashgraph HBAR has entered a suspiciously calm phase, almost too calm. The price has been locked between 0.64 and 0.72 range for over 2 weeks, building up pressure like a coiled spring. But what's interesting is the timing, right as ETF speculation surrounding enterprise-grade blockchains hit social media again. Could HBAR be quietly positioning for a bigger move? 1. Price compression's explosion coming. HBAR's price chart is showing flat RSI around 50, neutral. Volume declining, which often precedes a breakout. Bollinger Bands tightening, suggesting a volatility squeeze. Analysts note the current structure is forming a classic ascending triangle, with a key breakout point at 0.0735 cents. If that breaks with volume, targets of 0.8 and 0.095 are back on the radar. 2. ETF narrative, real or hype? Here's where it gets intriguing. HBAR is backed by some of the biggest enterprises in the world via the Hedera Governing Council, including Google, IBM, Boeing, LG, Standard Bank. Now there's growing chatter that enterprise layer ones like HBAR and Quant, QNT, may be included in future ETF baskets focused on institutional-grade digital assets. While no official filings exist yet, HBAR-focused social media channels are ramping up, claiming BlackRock and Fidelity have explored Hedera's documentation. Even if that's speculation, it's pumping narrative fuel into a coin that's otherwise been flying under the radar. Number 3. Hedera's real-world use case strength. Unlike many hype tokens, HBAR is live, fast, and used in production. Avery Dennison uses Hedera for supply chain tracking. United Nations and NGOs use it for climate and sustainability tracking. Payments and identity pilots are active in the UAE and South Korea. So while its price may be sleepy, its fundamentals are wide awake. Bull versus bear setup bulls point to a clear support floor around a 6.4 since institutional counsel and potential ETF angle, long-term use case validation, and steady dev activity. Bears say ETF narrative is pure speculation, no filing exists, volume is too low to sustain any breakout. Prior breakouts have always faded back into consolidation. Key levels to watch. Breakout confirmation, 0.0735s, upside targets in 0.8, $0.95 fence, breakdown danger zone below 0.64, could retest 0.57. From XRP's legal time bomb and final Elliott wave setups, to HBAR's silent compression and XDC's unexpected surge, the altcoin market is far from dead. It's reloading. But here's the catch. None of this happens in isolation. Regulatory shifts, ETF speculation, and macro volatility are converging fast. The next breakout might not give you time to react. It'll reward only those already positioned. Whether you're betting on XRP's final wave, eyeing Stellar's reversal, or stalking the next leg on XDC or HBAR, this might be the last moment of silence before the market screams. Drop a comment. Which coin are you watching most closely this week? XRP, XLM, XDC, or HBAR? Smash that like if you're tired of noise and want real sharp analysis that gets to the point. Subscribe, hit the bell, so you never miss when the next market shift drops. Because in crypto, the window opens fast and slams shut even faster.